Good morning. You're watching The Market right here on ET Now with me, Aisha Faridi, Avan Dabash, Nikunj, Dalmia on the show. And what happened last week? Well, the Nifty managed a fall of nearly about 3%. Midcaps, well, they did fall a lot less by about almost 2% or so. All major NSE sector indexes closed lower. Metals, Realty, PSU banks, they were the most hard hit. FMCG, thanks to the movement in ITC, managed to stay resilient, as was the case with some of the healthcare names as well. But yes, we did kickstart a brand new series as well. The Nifty Premium is now standing at about 100 points for the Nifty Bank at 245 odd points. And soon we're going to be in the last month of the first quarter of this calendar year. And almost closing the financial year.
Yeah, and if you look at what markets have done in this entire financial year, returns have just not been there.
Yeah.
We'll talk about it, but right now you have to really put the things into context in terms of what has transpired for market action for the week gone by. I think it's a global plus a local shift, not a change, but a shift in the narrative. At the beginning of the year, it had appeared that globally and locally, the print of inflation, the worst print of the inflation was behind us. But now that thought is getting challenged. When a very basic thought that where inflation and interest rates are headed, if that gets challenged, that will in a sense lead to a sharp adjustment in the market. So that is the reason why globally markets are correcting after what we've got in terms of inflation print, the central bank commentary, comments from central bankers who've come to G20. All that put together is leading to nervousness in the market. FIs, they have been net sellers. They were buyers for very few days, but in general, that flow in a sense continues. The Nifty has failed to scale up. We are going back to the key levels from where Nifty historically has found support. Will it get tested this time? We'll talk about it. But in general, the mood, I guess, is clearly telling you that if you're trading, it's a bad. Trading has not been a very futile exercise. The market momentum is lacking. If at all, there is now nervousness in the global market, and the excitement to really even participate in the market, I think, is drying. More than the absolute collateral damage, it is just the desire to trade or desire to invest is just missing. Volumes have dried up. Nobody wants to look at the market. It's just a market which is getting a royal ignore.
Fatigued. Although, must warn you that March has been, famous for being one very volatile month as we kickstart a brand new one, almost. In 2018, the Nifty fell about 3%. 2019, that's the pre-COVID year, we managed to gain 7%. 2020, of course, was the start of COVID. You had a big crash, so 23% is the kind of fall that we had. 2021, a more somber one with just a negligible 1% move on the index, and then 2022, it was a 4% gain. So let's see what the current series actually throws up at us.
The difference, I guess, Aisha, is that we saw sell-off in March 2022 largely because of Ukraine and largely because of war. 2020, you had the COVID hit, and 2021 was just another normal year. So March, in a sense, has been a very tricky one to call, and this time also, I think it will not be an easy one to call. If globally inflation peaks out, money will come back. If globally China starts decelerating, money will come back. So I guess the month of March would be a very tricky one to call, consider the backdrop and considering the kind of setup we are in. This is a market which surely is testing patience for investors. This is a market which is making everybody wonder that is it a good time to just stay invested in equities. So if you have to divide the market in the short term, I guess in the month of March, as of now, it appears that it may be a very difficult month. It may not be an easy month to call looking at the global setup. I've been asked this question again and again, folks who meet me and folks who ask me on social media that SIP ka kya kare? Arey bhai, SIP you bought for 10 years. It's only been 1 year of lull return. So this is the time you have to really, follow that discipline. Yeah. So if you are buying in for 5 years plus, I think you should not panic. If you have a time view of 1 month to 3 months, then this is a market you do not want to trade. I guess the market trend will only come if you get a local trigger which is positive or globally something goes wrong. Unfortunately, what is happening is that globally things are moving in the wrong direction rather than the right direction on the inflation front, which is leading to vacuum, which is leading to volatility, and which is forcing the bulls to really go behind the firing line.
Yeah, and speaking of the global markets, a quick roundup. You had the major averages, which posted their biggest weekly losses. The Treasury yields as well have seen quite a jump on the back of the latest reading in the personal consumption expenditure in the US. Asian markets, they seem to be tracking what the US is up to, and for the most part are in the red. That's the SGX Nifty as well, indicating a pretty soft start for us. And now we'll be watching out for developments with the Japanese governor speaking and the unemployment numbers from Japan. And mind you, you've got the dollar index as well hovering around 105 mark. That was a 7-week peak. But moving right on then, let's talk about the Adani group of stocks back home, because the acute volatility only continues. Those are the charts of the Adani group stocks from their 52-week lows, how much they've recovered. So you have seen a substantial recovery for the most part in the likes of Adani Ports, Adani Power, NDTV, etc., and a close to 40% Nikunj recovery from the 52-week lows. So volatility is pretty imminent in this cluster of stocks.
No, it's coming at so Adani group of stocks, and the narrative now seems to be popping right back up, and especially after the collateral damage what we saw in some of these stocks, let's say just in and around the expiry. The fact that Adani group of stocks have not stabilized per se is not making markets nearly nervous, but markets are again discussing some of these stocks. So the two stocks which in a sense which are occupying lion's share of narrative, enjoying lion's share of narrative. I would say one is Ambuja Cement and second is Adani Ports. So barring Ambuja Cement and Ambuja Cements and Adani Ports, from an institutional standpoint and from again an HNI standpoint, nobody is really focusing too much on these stocks. Adani Power or Adani Wilmar or even for that matter ACC, they are not part of the narrative. So why are we talking about them? Well, we are talking about them again because on Thursday and Friday you did see some kind of selling in them. The impact of that I think is visible in some of the banks and some of the LIC stocks. So yeah, this is something which may not occupy the center stage, but this really is something which markets again would be curious now that the series has ended, how some of these stocks would move.